In terms of an AI opportunity set in China, it is the cloud computing players that companies like Baidu with its Ernie bot, large language model, and in the case of Alibaba, it's called QN. They're basically giving it away for free. It's open source. In China, they kind of recognize that anyone can build a large language model. There's no moat. The opportunity is in cloud computing. So they're actually literally giving it away for free.
I'm your host, Melanie Schaefer. Welcome to Lead Lag Live. China's equity market is entering a pivotal phase. A recent meeting between President Trump and President Xi in South Korea led to a one-year suspension of multiple tariffs and export controls, along with China resuming U.S. soybean purchases. A significant step that's boosted sentiment in both markets. At the same time, AI and semiconductor innovation, policy stimulus, and improving corporate earnings are driving a new wave of optimism for Chinese tech and internet stocks. My guest today is Brendan Ahern, Chief Investment Officer at KraneShares and one of the most respected voices on China's markets and ETF investing. Brendan, it's great to have you here again.
Yeah, likewise, Melanie. Thank you for the opportunity.
So let's start with earnings. Internet and technology companies in China have outperformed expectations this quarter, with cloud and AI revenues leading the way. What's your outlook for Q3 earnings among the major China-based internet names? And do you think that strength is sustainable into 2026?
Yeah, I mean, really the strong performance of Chinese equities, particularly growth equities like we're invested in with KWEB, our China Internet ETF, it's really been multiple expansion. And certainly the earnings front, as we go into Q3, we know that e-commerce players like Alibaba, JD, and Meituan, they're facing the headwind of very, very light domestic consumption in China. Also, the headwind of very fierce competition. At the same time, there's some really areas of opportunities in terms of online video. Companies like Bilibili, Kuaishou. One of the stars thus far that's reported is online music provider, Tencent Music Entertainment. Online gaming's been a great spot for companies like Tencent as well as NetEase. And again, so part of what we offer in KWEB is a pretty diversified approach across almost 30 names, but across a whole different types of different subsectors. And those different subsectors are kind of like they're moving at different speeds at different times. And as much as Alibaba, it's probably one of the biggest names in the space, one of the names people gravitate to. It's really struggled on the domestic e-commerce space. Obviously, their cloud computing, which is really driven by AI, has been one of the standout areas within the companies. But again, that's part of the diversified approach we have in KWEB. And again, domestic consumption is a little bit tougher, but some of the other areas we do see some opportunities.
Yeah, so what about involution? I mean, you've talked about that before, Brendan, a hyper-competitive cycle we saw in e-commerce. Do you think that phase has finally peaked? And how has the government policy played into stabilizing the sector?
Yeah, certainly we saw this anti-involution, this campaign to look at excess competition, overcapacity, as well as excess competition back in July. I think where we've seen the initial efforts really coming to fruition is in some of the solar companies that two of the global leaders in solar panel manufacturing, Tongwei and LONGi Green Energy, they have a lot of top line revenue, but they actually don't make money because there's so much competition. Because we've seen the government curtail production, these companies, as they reported their Q3 financial results, they dramatically reduced their losses. And again, this is just the first little taste of this anti-involution in solar. The other place we're seeing this pan out, Melanie, is the October CPI in China was actually turned positive. And China's been stuck in a little bit of a deflationary spiral because of things like excess competition, light domestic consumption. But CPI actually turned positive. And yes, it's 1 month. But again, we're just seeing green shoots. And certainly e-commerce is an area where we're seeing a lot of competition. We've seen the government only start to pivot to address this. And why? Well, certainly the 15th five-year plan talks a lot about domestic consumption, of becoming self-reliant, certainly in science, technology, but also in domestic consumption, making themselves a little less dependent upon export-driven manufacturing. So again, green shoots, early days, but something that we think is underappreciated in the market.
Yeah. So, Brendan, that leads me to my next question. For investors who are looking at allocations right now, what segments specifically of the China market do you find most attractive for the remainder of this year? And are there any areas that you would avoid?
Yeah, I think one, we're seeing investors globally coming back into China, and particularly amongst non-U.S. investors, that a lot of European investors, particularly in Switzerland, because of the euro and Swiss francs appreciation versus the dollar, they're not making a lot of money in U.S. equities, and so we see this rebalancing effect taking place in Europe, in Asia. A lot of those investors, particularly institutionally, their economy is so geared to China, as we see in the export numbers. China's largest trading partner is ASEAN. So, and then obviously the commodity world, like a company like Vale in Brazil or BHP in Australia. These very large companies are very followed by institutional investors locally. And they see those companies are doing really well in China. So we're seeing this global rebalance taking place. And where is that money going to go within China? It's going to go to growth stocks. I mean, investors look to EM for growth, and China has a whole host of cheap China tech companies that are on sale that we own in KWEB. Now within China tech, an area that we recommend a little caution is on a lot of the semiconductor stocks in China, very, very high valuations. And I think we're seeing some recent weakness just because investors are worried, can these domestic chip providers, can they really live up to exceedingly high expectations? We've had a few misses from Q3 earnings space. So within the broader China tech space, you really got to be a little careful because of some of the exceedingly high semiconductor valuations in China today.
Yeah. So speaking specifically then about Alibaba and Baidu, both saw cloud revenue growth far outpacing the overall performance. Do you think this signals a structural shift then in where China's tech sector growth is going to come from over the next few years, given what you've said about, the semiconductor space?
Yeah, it's interesting. In terms of an AI opportunity set in China, it is the cloud computing players that companies like Baidu with its Ernie bot, its large language model, and in the case of Alibaba, it's called QN. They're basically giving it away for free. It's open source. It's very different than what you're seeing from, say, US AI players, where they're if it's OpenAI, Anthropic, Perplexity, et cetera. In China, they kind of recognize that, well, anyone can build a large language model. There's no moat. The opportunity is in cloud computing. So they're actually literally giving it away for free. And we saw from in August, the previous quarter, in the case of Alibaba, it was only 13.5% of their revenue, but it grew 26%. I'm talking about the cloud. In the case of Baidu, it was 20% of revenue, grew at 27%. In the case of Tencent, it was coincidentally 10% of revenue, but it grew 15%. So we do really see this cloud computing as the way to monetize AI. And Stanford University has an AI index where they actually track global AI players. And certainly, we don't look at it as a race between the U.S. and China. U.S. is ahead, but in some of the categories, Chinese companies are actually ahead of their U.S. equivalents. The big difference is these are not unicorns. These are companies that you can invest in today, and they're actually at reasonable valuations relative to what we're seeing in some of the U.S. AI plays.
Yeah, so I think we've talked a little bit about some of the larger holdings within KWEB. What are some of the smaller companies that KWEB has allocated into where you see significant growth or that investors should be taking a look at within the ETF?
Yeah, it's a great question, Melanie, because I think, time and again, we see investors say, okay, I get what you're saying. It's going to go by Alibaba. And as much as we're believers in the company, we do think that the company faces a little bit of a challenge because of the domestic consumption situation in China continues to be pretty tough going because of the real estate crisis, precipitous fall in urban household wealth allocated to housing. So e-commerce is an area we've actually kind of been, we'd recommend almost an underweight, so to speak. I mentioned Tencent Music, which really delivered some outstanding results. But other players in this space that I'd be watching are Bilibili and Kuashu. These are online video companies. Bilibili really geared to gamers. And then Kuashu, it's almost like a TikTok. It's a short video platform. These are very, very popular across in China. They're actually going global as well. Kuashu's actually set up shop in Brazil. But these are really under the radar. And I think the nice thing is about a KWEB is those names are going to be very volatile. I think particularly for an investment professional, you'd be very nervous holding a stock that has such a exceedingly high standard deviation. But that's the benefit of KWEB. We can hold that for you, hold it in a diversified manner. So again, really online video, online entertainment is an area we really like. And certainly, again, it's nothing against Alibaba and the e-commerce players. It's a real opportunity in the long run. We're just saying in the short term, they face some challenges.
So then, I want to take a step back to sort of the macro economic outlook right now. But given the thaw in U.S.-China relations following the Trump-Xi meeting, and I know you've been over into the sort of area recently, how might global investors rethink their approach to Chinese equities as a whole? And what should they keep in mind about the potential policy reversals with President Trump leading the U.S. and new trade developments?
Yeah, and I think we're seeing this re-rating of Chinese equities really being driven by non-U.S. investors. That again, a lot of those global investors, one, they're potentially rebalancing some of their U.S. positions because of valuation concerns or currency depreciation. But I think also just on an absolute basis, they're seeing inexpensive valuation in the KWEB name. So in the U.S., it is a little bit tougher because the media narrative remains so negative. But we really do believe that President Trump has done this truce, this detente with President Xi that will arguably lead to further conversations, potentially a state trip to China from President Trump. And certainly the Republican Party will follow whatever President Trump dictates because he is ultimately the El Jefe, the big boss of the Republican Party. And so I think they'll fall in line or potentially suffer the consequence, which, certainly, you're either with Trump or against him. And I think the Republican Party will fall in line as he does more deals on the China side. So U.S. investors, because of this continuing negative media narrative, have been very slow to allocate. Again, we're outperforming the S&P 500 significantly on a year-to-date basis, even more significantly when this rally started back in January of 2024. So we're really constructive on money getting pulled off of the sidelines back into Chinese equities because of this outperformance. It's just in the U.S., the narrative, the media narrative has been so negative that I think a lot of investors are still on their sidelines, but it's just going to get increasingly harder to ignore.
Yeah. And Brendan, just finally, for anyone watching who wants to learn more about KraneShares, explore specifically the KWEB fund or read more about your research, where's the best way for them to go?
Yeah, I mean, certainly KraneShares.com or KraneShares /KWEB is where you can find out. We publish a lot of our KWEB specific research, our presentations. And then I write a daily research blog called ChinaLastNight.com where we look at what we think is the important things that happened in China overnight, things that you're not going to read from traditional U.S. media sources, which are perpetually negative on China. And so, again, it's a balanced, data-driven perspective on what's happening there on a daily basis. And that's simply ChinaLastNight.com.
Just like throwing it out there from left side, but what are your thoughts on the news that China is developing a drug that will let people live until they're 150?
Well, personally, I hope so, out of my own self-preservation. I think it's interesting. One of the areas we're seeing really strong performance across Chinese equities. You obviously have the KWEB companies, clean technology. Again, we have K Green. Part of that's driven by very inexpensive electricity in China because of the high amount of renewables and solar, wind, nuclear, and hydro. So people haven't really thought about clean tech as a AI play. And the other one is healthcare. And a lot of that is because a lot of the biotech companies in China are adopting AI very significantly. In China, there's no liberal arts graduates. People are STEM graduates. And so you've had this policy, this emphasis on STEM education for decades. And you're seeing that investment pay dividends. And you see it in AI and in industrial manufacturing. But biotech, I think, is an area where increasingly we see a lot of global pharmaceutical companies doing deals with Chinese biotech companies because they're doing very innovative drug sales. So again, I think we're seeing some really interesting developments. Actually, there's a big Chinese player. They're going to be launching their lung cancer drug globally through a U.S. pharmaceutical company. A real opportunity again. And the sooner the better. We can preserve life. I don't think anyone should care if it's China, the U.S., or Switzerland, or Canada, wherever. We'll take it.
Absolutely. Well, Brendan, thanks again for joining me, and thanks to everyone for watching. Be sure to like, share, and subscribe for more episodes of Lead Like Live.